Hey traders, Raghi here, and in this recap video I'm going to teach you a very quick way to assess early on, before even the Wall Street bell rings, whether or not you're dealing with an above average volatility day. Now, why would you want to know that? It's going to really make you adapt to what? A higher risk tolerance. You're going to get a better idea of what kind of price movement range has already been exhausted, how much more volatility you could possibly see. I mean, there's really so many different advantages to knowing very, very early on in the morning, before the Wall Street bell rings, whether or not this day is more volatile than most. And I can usually assess this as early as 8:30, even going into minutes before the bell. So let me show you how it worked out today and show you how we crunched the numbers. Take a look at the high that we put in, and this was actually at 4:10, 10 minutes after the Asian session. Now, whether you're up at that hour or not, sometimes I am, sometimes I'm not, but whether or not you're up at that hour, you can always go back in time and look at that near-term high, which happened to be 26.55. The next low I see right here, and this is at 20 after 9 East Coast time, was 26.75. So all we need to do at that point is just grab the calculator here, and all you need to do that is 26.55 minus 26.75, and you end up with, before the bell even rings, a price movement range of 28.25. Now, we already know that the first 30 minutes after the Wall Street bell rings is called the clearing period, and it's sometimes the most volatile trading action we'll see in the day. Sometimes we'll put in the high or low of that trading session during that clearing period. But even before we get there, I'm at 28.25 on a price movement range. And by the way, let's say I wanted to assess this far earlier in the morning. I could have known that even by 4 a.m. or even by, say, 7 or 8 a.m., we could have had basically an estimation. Instead of a 26.75, I could use this low right there at 26.30.25 and made a very similar judgment on price action. So we would have been already, let's do it again. Let's say I go take 26.55 and I take 26.30, something that I would have known well before 9, well before 8 even, and I take that 26.25 and I have 24.75. Well, let's take this back to the auto chartist. And I'm going to look at the price movement range by day of week, and I look at the Monday expectations. And here I can already see I've blown that number out of the water by either calculation. In fact, the upper end of the week is somewhere around 31 and change. So we know that already for specifically a Monday, I'm beyond the typical price movement range, and I'm actually flirting with something that would be more along the lines of a high for the week, the highest high that I could see on any given day of the week. Do I have an above average price movement range for Monday? Yes, but what about an above price action movement for the week? Not for the week, but I'm really close. So immediately I'm functioning from an expectation of what can I see if this were Thursday, and how do I react if we could see up to 32 points of price movement, and how would that adjust my stops, my expectation for intraday movement, even my profit targets. So this is just one piece of the puzzle, and I'm showing you how quickly and easily you can assess that before the bell even rings. Heck, before we even get 8:30 economic releases sometimes. And this is why, for me, the trading day is really a 24-hour trading day, and for me it often starts as early as 4 or 6 a.m. Eastern if I happen to be up. But even if I'm not, notice the edge that I have immediately, being able to gauge that the price movement range is already in exhaustive ranges, and that we could see up to 31 points or greater, and I can make those estimations. So as soon as I know I'm at this upper end, with a few more calculations, I can actually predict to a very high degree how many more points I could expect. And the whole reason that starts is because I know that very early in the morning, we're already in kind of a almost hyper volatility mode. So I can start to calculate what I call rare air, or 32% expectations, and even 2x expectations. This is something we do in the chat room every day, and it really does give you an edge over traders who are letting price action unfold in front of them to only discover that we're already dealing with a market at full tilt. We know that way earlier, and that's a tremendous edge. I'll see you in the next update.